Congress just voted to create a $14 trillion digital competitor to gold, and most gold holders have absolutely no idea it even exists. The Genius Act passed the Senate Banking Committee with an 18-6 bipartisan vote, according to the congressional record, creating a fully regulated government-backed digital dollar framework. If you are holding gold or silver as your safe haven right now, your protection thesis just got a $14 trillion hole punched through it. But here's the part that changes the math on everything, and it is a number that not a single precious metals channel has covered yet. Now, before you think this means gold is done, let me stop you right there, because what I am about to show you over the next 10 minutes is going to flip that assumption completely on its head. Here is a number that changed everything when I dug into the actual legislation. The Genius Act requires every single digital dollar token to be backed one-to-one by United States Treasury securities or cash reserves. Let me say that again. Every digital dollar must hold a Treasury bill behind it. That means Congress just created the single largest forced buyer of government debt in history, and that has a direct consequence for your gold and silver stack that nobody is connecting. Subscribe right now, because what I am about to show you is not being covered on any other precious metals channel, and the implications for your stack are massive. So let me walk you through exactly what is happening and why it matters more than almost anything else in the precious metal space right now. The Genius Act stands for Guiding and Establishing National Innovation for United States Stablecoins. It passed the Senate Banking Committee on March 18, 2026, with broad bipartisan support. What this legislation does is create a regulatory framework for stablecoins digital tokens pegged to the dollar that must hold 100% reserves in cash or short-term treasuries. Now, here is where it gets critical for you as a gold or silver holder. The current stablecoin market is already worth over $200 billion. Industry projections from Citibank and Standard Chartered suggest that within 3 years of regulatory clarity, this market could expand to $2 trillion. Some estimates from the Bank of International Settlements put the 5-year target at $3.7 trillion. Every single one of those dollars must be backed by a Treasury security. Think about what that means. Congress just legislated into existence a massive new source of demand for government debt. And if you have been paying attention to what drives gold prices, you know that gold's primary competitor is not stocks, and it is not crypto. Gold's primary competitor has always been Treasury yields. When Treasuries pay more, investors move out of gold. When Treasuries pay less, gold rises. That is the fundamental seesaw that has driven gold prices for 50 years. But here is the twist that nobody in the precious metals community is talking about. What happens when the government suddenly needs to issue trillions in new treasuries to satisfy stablecoin reserve requirements? Let me show you the math, because it tells a very different story than what you might expect. Let us start with what the gold market is actually telling us right now. Gold is sitting near $3,050 per ounce as of this morning. The World Gold Council reports that central banks bought over 1,037 tons of gold in 2025, the third consecutive year of purchases above 1,000 tons. The gold market cap sits at approximately $14.2 trillion, making it the largest single asset class outside of government bonds and equities. Now, here is where the Genius Act creates a genuine collision. The legislation requires stablecoin issuers to hold reserves in United States Treasury bills with maturities of 90 days or less. According to the Federal Reserve data, the total outstanding Treasury bills under 1-year maturity currently sit at about $6.1 trillion. If the stablecoin market grows to even $1.5 trillion, as Citibank projects by 2028, these issuers would need to absorb roughly 25% of the entire short-term Treasury market. That is not a small number. That is a structural shift in who owns American government debt. And when demand for Treasuries surges, what happens to yields? They fall. When yields fall, what happens to gold? It rises. This is not speculation. This is bond market mathematics. Now let me take this one layer deeper, because the implications for silver are even more dramatic than for gold. The Silver Institute's annual report confirms that silver ran a structural deficit for the fifth consecutive year in 2025, with demand exceeding supply by over 215 million ounces. Industrial demand from solar panel manufacturing alone consumed over 232 million ounces last year, according to the International Energy Agency. Meanwhile, total mine supply has been essentially flat at around 830 million ounces for the past 3 years. So you have a metal that is already in a supply crisis, and now you have legislation that could push interest rates lower, which historically sends precious metals higher. The gold to silver ratio is currently sitting at approximately 94 to 1. The historical average over the past 50 years is around 60 to 1. If you believe the ratio reverts even halfway to 70 to 1 at current gold prices, you are looking at silver above $43 per ounce. If gold rises because Treasury yields fall from stablecoin demand absorbing the bill market, you could see silver push well past $50. But wait, I need you to think about something that almost nobody is considering. The Genius Act does not just create demand for treasuries, it creates something far more powerful. It creates a government-sanctioned digital dollar that works faster than gold. It settles in seconds. It moves across borders instantly, and it carries the full regulatory backing of the United States Congress. If you are holding gold as your safe haven, ask yourself this question. What happens when a 25-year-old investor is choosing between a government-backed digital dollar that earns yield and gold bullion sitting in a vault that costs storage fees? The generational shift in how people think about safe havens is not hypothetical. It is being legislated into existence right now. Here is a comment prompt for you. Tell me in the comments right now, do you think the digital dollar helps gold or hurts gold? Drop your take, because I think the answer is going to surprise most people. Now let me show you the counter argument, because this is where it gets fascinating. There is a very strong case that the Genius Act actually makes gold and silver more valuable, not less, and the data backs it up. Here is what nobody is telling you about the Genius Act, and it is the most important piece of this entire puzzle. Every single stablecoin dollar must be backed by a Treasury security. That means the United States government must issue more debt to accommodate this new demand. More debt means a larger national debt. The national debt already sits at $36.2 trillion according to the Treasury Department. If stablecoins add even $2 trillion in new Treasury demand over 5 years, that is $2 trillion more in government obligations. And here is the revelation that changes everything. Throughout history, every major expansion of government debt has eventually led to higher gold prices. Every single time. After the 2008 financial crisis, when the Fed expanded its balance sheet by $4.5 trillion, gold went from $800 to over $1,900. After the 2020 pandemic stimulus, when debt surged by $7 trillion, gold broke through $2,000 for the first time. Now Congress is legislating a structural mechanism that forces continuous Treasury issuance for as long as stablecoins exist. The Federal Reserve's own research papers acknowledge that sustained Treasury issuance at this scale would put downward pressure on short-term rates and upward pressure on long-term inflation expectations. JP Morgan's metals desk published a note last month stating that any legislation forcing new Treasury issuance should be treated as structurally bullish for hard assets. Let me say that plainly. The same law that creates a digital competitor to gold also creates the exact monetary conditions that make gold go up. That is the paradox that nobody in the precious metal space is connecting. And for silver, the picture is even more compelling. Silver is not just a monetary metal, it is an industrial metal. The same government that is creating digital dollars is also spending billions on renewable energy infrastructure that requires silver. The Inflation Reduction Act allocated $369 billion to clean energy. Solar panels alone are projected to consume over 300 million ounces of silver annually by 2028, according to the Silver Institute. You cannot build the digital economy without silver. You cannot build the green economy without silver. and you cannot expand the stablecoin market without issuing more debt, which makes silver's monetary premium go higher. If you are finding this valuable, hit that like button right now, because this is the kind of analysis you will not find on mainstream financial channels. And if you want these breakdowns every time something this significant happens, subscribe and turn on that notification bell, because the next few months are going to be critical. Here is what I want you to think about. The Genius Act is not a threat to gold. It is an accelerant. It is a legal mechanism that guarantees more government debt, which guarantees more monetary expansion, which guarantees that the purchasing power of the dollar continues to decline. And when the dollar declines, what goes up? Physical gold, physical silver, the assets you can hold in your hand. Now, there are 3 types of people watching this video right now. The first type is panicking. They heard digital dollar and they think gold is finished. They are going to sell their stack at the worst possible time because they do not understand what is actually happening. The second type is confused. They can see both sides of this argument and they are frozen. They are not buying and they are not selling, and that indecision is going to cost them. The third type understands what I just showed you. They see that the Genius Act is not destroying gold's safe haven status. It is reinforcing it by forcing the exact monetary conditions that have sent gold and silver higher every single time in history. Which type are you? Drop it in the comments. Type 1, Type 2, or Type 3. Let me leave you with this final thought. When Congress creates legislation that forces trillions in new government debt issuance, they are not making the dollar stronger. They are making the case for physical precious metals stronger than it has ever been. The institutions know this. Central banks bought over 1,000 tons of gold last year for a reason. They are not buying because they think the dollar is getting more valuable. If you are holding physical gold or silver right now, you are on the right side of this trade. The Genius Act did not make gold obsolete. It made gold essential. And silver, with its supply deficit and industrial demand, is positioned to benefit even more. Share this video with one person who holds precious metals, because they need to understand what Congress just did and what it means for their stack. Every reference and data source I mentioned is in the description below. This is not financial advice. Every individual must assess their own circumstances, risk tolerance, and investment objectives. But the data is the data, and right now the data is telling you something very clear. I will see you in the next one. Stay positioned, stay informed, and whatever you do, do not let the noise shake you out of the strongest setup precious metals have seen in years.